I feel like then with every boom, inevitably people start talking about when is it all going to collapse? And most recent memory for a lot of people, you go back to 07, 08, 09. This is not anything like that. Why?
No. Anytime you want to study a market, whether it's real estate or dog collars, you look at supply and demand. If the supply is low, demand is high, prices are going to go up. The contrary, prices go down. When you go back to 2006, you see inorganic demand driving record levels of buying activity. And inorganic demand is speculators, people that aren't really going to use the house. They're just going to own the house for a short period of time and make money owning it. We don't have any of that going on today. And obviously that's not an absolute, but relatively speaking, that is not what's driving the market. What's driving the market right now is organic demand. These are end users who are buying the homes. And because of that, our demand is not at the level it was in 2005. Most people don't know that. Our demand is much lower than it was in 2005, 2006. Okay. And not only is it lower, but it's a measurable population difference of over 20%. Meaning we've got a larger population in the US, we've got a larger population in Florida, and yet we don't have more home sales happening than were happening 15 years ago. Okay,
so that's huge, yeah.
Yeah, I mean, 20% more people are not buying as many homes. So that tells you that the demand is sustainable. Now, that doesn't mean it will be sustained, but it's sustainable. And what most people don't understand is the reason the housing bubble happened was we had builders building homes like crazy in 2005 and 6 because people were buying these houses in order to hold them for a couple months and flip them for a profit. Yeah. So builders were building like absolute bananas, and they drove the supply up and up and up. And then when the speculators could no longer flip the houses, they threw them all on the market for sale, and we were awash with inventory. And then they quit buying and demand declined. And the next thing you knew, we had several years supply of homes on the market, and demand was at half the previous rate. Back then, there were too many homes. Yeah. And when too many homes and demand falls, that's the definition of a housing bubble. Okay, we're in the opposite of a bubble. We're in a housing vacuum. I mean, we've got no way to produce the supply that the demand wants. So the closest thing we can do is slow down demand, and that's raise mortgage interest rates.
What about the mortgages then versus mortgages now too? Is that a big difference too in terms of who's getting mortgages now versus before?
Today's loan qualifications are much more stringent than they were back at the peak of the housing bubble. Right now, you pretty much have to have a record of repaying your debt for you to get a home loan. And that was not the case in 2005. And so if you take away all the investment loans that were helping to push the market, and you take away some of the crazier loans that got low credit buyers into the market, that's why we don't see demand so high. You've got to qualify for a loan.
Okay, so even demand isn't even near where we were at 10, 15 years ago. Supply is definitely nowhere near where we were at before. So then, as soon as supply catches up, do things level off? Or what else needs to kind of come into play here for things to potentially really cool off?
Well, now you're getting to the root of the issue. We've got literally a record low supply. It's never been this low. If you look at supply relative to the current rate of demand, it's never been this low. Less than 2 months of supply. Okay, when the housing market collapsed, we got over 20 months of supply. Okay, and so historic low supply, very good, strong organic demand. So why aren't builders building more homes? Well, when this all really started coming to a head after 2016, that's when the market equalized. What happened was the price difference between what a builder could build a home for versus what the market was trading at after the collapse was so big, builders couldn't really gear up. To use my local numbers, they could build a $400,000 home, but the demand was at $200,000. Okay, so what we're seeing now is home prices are exploding. Okay, before this year started, I forecast that we would possibly hit a 20% appreciation in this year alone.
which is
Okay,
insane.
yeah, normal is about 3.25. Crazy is at about 8%. So yeah, insanity starts at 20. So yeah, absolutely insane level. And it's going to take mortgage interest rates rising to help cool demand, which will kind of assist on the relative supply. But we're going to be starting to move to a new era. We've had 40 years of declining mortgage interest rates. So most mature homeowners do not know a world in which they can't move up to their next house with cheaper money.
So as the economy improves, are interest rates going to be then the sort of the biggest driver moving forward, at least in the immediate future, in terms of how crazy this market continues for a while?
Yes and no. I think the one thought is probably the biggest issue for housing for the next 100 years is going to be home affordability. I think if you look back over the last 100 years and you look at the center of mass of who could afford a home, unfortunately, we're going to be moving the bar up, and we're going to find that home affordability is going to decline greatly. A recent study on home affordability found that homes today are more affordable than they were in 24 of the past 30 years. Okay, that's how affordable they are today because of low interest rates and relatively low prices.
Sure.
Okay, but over the next 20 years, we're looking at the monthly carrying cost on a home is going to explode through the roof. It's going to go to levels never seen before. And because of that, the people that can afford homes is going to be a smaller group, and you're going to see that help accelerate prices, and that's what's going to get your market back in balance.
And that's because we're going to see mortgage rates steadily increase, is what you're expecting.
Well, I'm expecting for the next 2 years nothing to happen to mortgage interest rates. They'll fluctuate up a little bit, they'll fluctuate down a little bit, but the Fed, I believe, will not be doing anything unless we start to see inflation annualize it better than 2.25.
So short term, for people who are still in the market or who are on the fence about what they want to do, there's still a few more years here where it's going to be a good time if you want to sell your house and get a big bang for your buck, or if you're looking to still get in at lower interest rates. This is not going to be cooling off for a bit here.
Correct. I would tie the mortgage interest rates into the COVID recovery. When you start believing the economy in the greater part is recovering, you need to know that the Fed is going to need to start pushing mortgage interest rates higher to stave off inflation. But I don't see that happening immediately, so you should be in a very good interest rate market. I would tell homeowners that there has never been a better market to sell a home in a predictable timeline. You can absolutely decide what day you're going to close on the sale of your home. The flip side of that is buyers, you will never again in your lifetime find homes as affordable as they are today.
What about the potential rush of foreclosures on the horizon? I'm talking about COVID and recovery. Those federal moratoriums eventually are going to be lifted. Could that have an impact on pricing and supply?
Absolutely. And this is where a lot of the quote unquote experts like to hook their bandwagon up to, as they say there's going to be a foreclosure crisis. But by all counts, if every single foreclosure that appears to be in the pipeline, if it were to hit today, it would only balance the supply and demand at the U.S. level. Okay, and what most people don't understand is the word foreclosure is used, but it means different things to different people at different times. For example, is a foreclosure sale where a bank takes ownership of a property at the courthouse steps? Or is a foreclosure you getting served with legal papers saying, hey, you're late on your mortgage and we're going to take you to court? Okay, so they're used interchangeably, but those are two very different things. One is the beginning of the process, one is the end of the process. And what most of these evangelists that say the market's going to collapse, what they don't understand is there is equity in our market. Homes have been going up in value significantly over the last 6-7 years. And what that means is if somebody is late on their mortgage and they have to go through the foreclosure process, they'll just list their home, they'll sell it on the open market, they'll take all the revenue they get from that sale and pay off all the debts and the liens, and then they'll put a check in their pocket and they'll move on. The majority of distressed homes have equity in them and they can be sold, and there's a buyer standing by. And in fact, there's probably 3 buyers standing by. So a foreclosure is not this liquidation kind of thing. A foreclosure is just a forced sale, but on an open market where the supply is limited, they're going to be fine.
Yeah.
I don't think, I mean, to answer your question, I don't think we're going to see 4 million foreclosures hit the market on the same day. And because of that, I think they're going to be consumed. And I think it will help the imbalance between supply and demand, but it won't fix it.